Good day, fellow investors. My name is Sven Karlin, and this will be a rant against passive investment. I am appalled by what's going on in financial markets today. Let's take a look at the S&P 500. As you can see, in the last 20 years, or it goes up or it goes down. There is no in between. Why is that? What's going on? The problem is that people have stopped using their brains when they're investing. They just invest by feeling, no matter what's going on in the economy, no matter the valuations, no matter the book values, no matter the depth, the quality, the probabilities, nothing matters. The only thing that matters is whether the stock prices or stock market is going up or down. When it's going up, buy more. When it's going down, sell in panic. We have already had the same situation in the 1990s, in the 2000s, and every time it ended badly for investors, as they lost 50% of their portfolio. And especially the ones that don't think lose the most of their money. What's happening now? Again, after the crisis, everybody sold their stocks in the crisis, lost money and said never again investing in stocks. However, in 2010, 2011, stocks were cheap. The price-earnings ratio of the S&P 500 was below 15. Since then, it just went up. What does it mean when a price-earnings ratio, valuations go up? That means that stock earnings grow at a slower rate than stock prices, which is not logical. When that happens, stocks become overvalued and an imminent collapse is about to happen again. So if you want to protect yourself, don't invest in mindless, thinkless ETFs or any kind of passive investment funds. Now, what's going on? People have accepted the notion that in the very long term stocks will do well, and therefore let's just put money into the stock market and forget about it. And then let's put more money into the stock market as the stock market goes up. As you can see in this chart, this is just from 2 months at the beginning of this year, almost every single day, hundreds of millions were put into the core ETFs, mutual funds, passive investment funds. Those funds will just take that money and buy a little bit of all stocks available. That's it. Doesn't matter, nothing matters, just that they are getting their money and buying more stocks, pushing prices higher. I'll ask you one thing. What will happen when all these people that piled money into the stock market and have been doing that in the last 5 years will get a bit scary, there will be a recession, and all of them all at once will ask their money back. Funds will have to sell, and I tell you, the stock market will drop 50, 60, 70, even 80%. It will be complete headache. What am I going to do? Nothing. I'm going to buy stocks that have good earnings, good balance sheets, good price to book values, long-term growth, and where I can expect a satisfying long-term return. Whenever the price-earnings ratio of the S&P 500 was above the level of 25, 10-year and 20-year earnings have been negative in history. I have a Ph.D. on the subject, so you can either trust me or you can search the internet. What you can do is just buy smart or have a lot of cash and wait that stocks drop and then buy a lot when stocks are cheap. Don't buy now into everything. Or buy now, but buy stocks in smart companies, cheap companies, undervalued companies. There are plenty of those out there. So keep watching as we'll be discussing smart investments for the long term.